Welcome to the FinGlimpse podcast, where we analyze the world of business, finance, and the economy. We cover the latest market news, economic trends, and some interesting businesses. As a standard disclaimer, this podcast is for informational purposes only and should not be considered investment advice. Always do your own research. Now, let's get started.
Welcome to the Deep Dive. We're here to help you cut through the noise and get truly informed fast. Today, we're taking a closer look at the automotive industry. Specifically, we've got some projections for June 2025 we want to unpack. We've gone through, some detailed market reports, pulled out the key insights, really aiming to give you a quick handle on what's driving this vital sector. So, what's the plan? We'll look at the forecasted sales numbers, the growth trends, but maybe more importantly, we want to dig into the why behind those numbers. Across the different vehicle types, the different companies, our sources have some really granular data.
Exactly. The goal isn't just to throw numbers at you. It's about spotting the patterns, understanding what's actually happening, and critically, why it matters for the bigger auto market picture. And the reports themselves, they kind of set the stage up front. They're saying June 2025's wholesales performance, its manufacturers selling to dealers, it looks like it's going to be, well, a real mixed bag.
A mixed bag, okay. Right. Let's unpack that then. Which parts of the market are, revving up and which might be hitting the brakes? We should probably look at two-wheelers, tractors, passenger vehicles, and commercial vehicles. Sound like some interesting contrasts in there.
There really is. It's quite fascinating. Because while the immediate June picture seems mixed, the overall long-term view for the sector, it's actually still seen as pretty constructive. The estimates we're seeing suggest that segments like tractors, SUVs, and two-wheelers could clock high single-digit growth. That's over the financial years 25 to 27.
High single digits? Okay, that's pretty healthy.
Yeah, and notably outpacing commercial vehicles in that forecast.
Yeah.
And it's probably worth mentioning, the report does highlight specific companies as their sort of top picks for this period.
Oh, interesting. Who are they pointing to?
They call out Mahindra and Mahindra, TVS Motors, Motherson Wiring, Uno Minda, and Apollo Tires.
Right, a mix of vehicle makers and suppliers there.
Exactly. It seems to reflect where the growth is expected, like M&M with SUVs and tractors, TVS and two-wheelers, or key suppliers like Motherson, positioned to benefit across the board. They seem well placed for that medium-term growth. So, okay, let's dive into those key dynamics for June 25 itself, the mixed bag part. On the positive side, you've got two-wheelers and tractors. They look set for pretty healthy growth.
Okay, what's driving that?
Well, it seems to be supported by strong rural demand, for one, plus you have the ongoing marriage season that often sees bigger purchases.
Right, yeah, the seasonal factors.
And also, importantly, positive farmer sentiment. There's a lot of anticipation around a good monsoon this year, which always helps agricultural prosperity and, consequently, spending in rural areas.
Makes sense. Good monsoon hopes driving tractor and maybe two-wheeler sales.
Okay.
But what about the other side of that mixed bag? Passenger vehicles, commercial vehicles, you mentioned headwinds there. What kind of headwinds are we talking about?
Good question. So for passenger vehicles, or PVs, what we're seeing is pretty muted customer sentiment overall.
Muted sentiment, or right.
Yeah, translating into fewer inquiries coming in, and maybe more delays in actually converting those inquiries into sales. People are hesitating a bit more, perhaps.
And how are manufacturers responding to that hesitation?
Well, one clear way is through discounts. We're seeing some pretty dynamic strategies there. The report points to increased year-over-year discounts for companies like Hyundai, M&M, and Tata Motors.
Higher than last year. Okay.
Yeah, significantly in some cases. And even within Maruti Suzuki, specific models show big changes. Like the Swift is seeing a notable increase in discounts, apparently, and the Brezza's discounts are up several-fold compared to last June.
Wow, several-fold on the Brezza. Okay, that definitely signals some pressure to move inventory.
Exactly. It's a direct lever they can pull to try and stimulate demand when sentiment is soft.
Mm-hmm.
Now, for commercial vehicles, the CV space, the challenges look a bit different.
Okay.
We're seeing things like selective financing from lenders, so maybe it's getting a bit harder for some operators to get loans for new trucks.
Financing tightening up a bit.
Potentially, for some segments or buyers. Also, there was apparently some inventory stocking that happened back in May ahead of a mandatory AC rule implementation.
Right, so dealers maybe took on extra stock then.
Seems like it, which might mean they need to clear those older models first. And on top of that, fleet utilization is apparently, well, reasonable.
Meaning trucks are busy enough, but maybe not so busy that companies are rushing out to buy lots of new ones immediately.
That seems to be the picture, yeah. Less urgent need to expand fleets right now.
Okay, so that paints a pretty clear picture for the domestic market. Some bright spots, some real challenges. But here's where I found it gets really interesting. You look at the export numbers. Even with some of these domestic segments looking a bit subdued or even slightly down, exports for many companies are, frankly, booming.
Absolutely booming. It's a striking contrast, isn't it?
It really is. What kind of numbers are we seeing there?
Well, just as examples, the projections show Hero MotorCorp's exports potentially up 66% year over year for June. Aisher's two-wheeler exports up almost 71%.
Huge jumps.
And it's not just two-wheelers. Tata Motors CV exports projected up nearly 77%. Escorts tractor exports up over 92%.
92% for Escorts tractors. Incredible. So there's clearly strong global appetite for certain Indian-made vehicles right now.
Absolutely. It suggests, a strong demand internationally and perhaps for some companies a growing strategic focus on diversifying beyond just the domestic market, especially looking at regions like Latin America and Africa, which were noted as strong markets for two-wheeler exports, for instance.
Right. Hedging their bets, maybe, or finding strong growth elsewhere?
Could be. And, if we try and connect this to the broader economy, something interesting is the e-way bill generation data.
Ah, yes. The electronic permits for moving goods, what are they showing?
Well, year-over-year growth in e-way bill generation is actually robust. It's quite strong.
So even if CV dispatches are sluggish for the reasons we discussed.
Exactly. The fact that lots of e-way bills are being generated suggests that freight availability is actually pretty good for transporters. Good they're moving.
That's a positive underlying signal then, isn't it? Despite the direct CV sales figures.
It is. It suggests a certain level of economic activity is still humming along. Which does raise a question, How might these internal auto market dynamics, these headwinds in PVs and CVs, how might they evolve alongside these more positive, broader indicators like goods movement?
That's a great point. So thinking about all this, what does it mean for you, our listener? I think it's just a really compelling reminder, isn't it, that even within one industry, like automotive, different segments are just operating on completely different tracks. They're being pushed and pulled by such a diverse mix of factors, everything from consumer confidence and global demand right down to, the timing of the marriage season or monsoon forecasts.
Absolutely. It's incredibly multifaceted.
And those discount strategies we talked about, Hyundai, M&M, Tata Maruti, adjusting things, that just tells a powerful story in itself about how manufacturers are actively trying to navigate these really varied market pressures in real time.
Yeah, they're constantly adjusting. So maybe here's the thought to leave you with, building on all that. You got this really significant and quite diverse growth happening in exports across different vehicle types. At the same time, you've got this complex mix of drivers and constraints playing out in the domestic market. So consider this. How much will that resilience, that growth in export markets, especially from places like Latin America and Africa for two-wheelers, how much will that start to reshape the core strategic focus for Indian auto companies in the coming years? And, sort of relatedly, how will these players balance those expanding global opportunities with the sometimes tricky, very nuanced conditions they continue to face right here at home?
That's all for this episode of the FinGlimpse podcast. If you found our discussion insightful, please consider subscribing and leaving a review. We'd love to hear your thoughts and suggestions for future topics. Until next time, stay informed and make smart decisions. Goodbye.